All right, guys, good afternoon. Welcome aboard to our weekly recap. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. My apologies if I'm a little distracted this morning. I do have this guy here. He's chilling with me today. Wants to just sit on my lap this morning. Does not want to get up. So I'm sure he can fall asleep while I talk about the markets. Good morning, or good afternoon, everybody. Happy Saturday. It is September 23rd, 2023. Glad to be with you. Welcome aboard to GAR Capital's YouTube. If you haven't already, make sure to hit that like and subscribe button. Really do appreciate the support as always. Got a couple of things to go over this week. Tough week, but we will prevail. We will endure as we have all along. So let's go ahead and start with the Dow down 106 points yesterday. The NASDAQ was green for the majority of the session. We had an ugly power hour, more like a sour hour, 3 p.m. S&P down 0.23%. Volatility index right now, 1.94% to the downside, 1720. And then we had small caps and in the red, down about 0.23%. Unfortunately, happened at a time where I didn't expect it or wanted to. I wanted that to fall pre-market. We didn't. We got a bounce pre-market. So let's go ahead and go over. Hey, relax. Hey, sorry, he's biting. He's like gnawing at my hand. Relax. All right, let's go ahead and take a look first. Let's kind of take a look at the market in general and see how we're doing in terms of context. So let's see. We have, this is 1 year to date, year to date on the S&P 500 is up about 12.92%. This is from, 12.5%. This is from Koifin. This is free for everybody. I highly suggest everyone who's into trading and into stocks and investments, bonds, Forex, all that good stuff. This is kind of a Bloomberg for free, basically, without like the news and everything like that. And it does have news, but Koifin is a great free app to get online. The tablet one isn't the best. I think the best one, honestly, is the desktop one, in my opinion. So the NASDAQ still, even with yesterday and last week's fall, up 34% year to date. We have the Dow right now up about 2%. The Dow up 2.46%, and the Russell is up about 2%. So at least year to date, we kind of see some sort of context, but that's where we are. Quarter to date, this is starting from July. You can see now the Dow is red. The S&P is also down about 2.83%. The NASDAQ down about 3%, and the Russell down about 5.86%. So you can see kind of the downward slope that we have at least currently. All right, so that's where we are, at least in terms of context for the year. And let's go ahead and take a look at the S&P 500 so we know where we are. We had the most recent highs right around 46.33. And the reason I'm doing this is to see where we are. So 46.33, we closed at 43.62. This is from Percentage Calculator. Again, one of my favorite tools to have as a trader, because you definitely want to get quick percentages without doing the math yourself. We're about 5.84% from peak here on the S&P 500 futures. We do have a gap to fill. If you guys remember, that was from the rollover of the contract from the second quarter. I don't expect, not the fact that that gap has to fill. I just don't think it's a gap that's something that we should focus on. But again, it could fill. So far in terms of the S&P, hey buddy, in terms of the S&P 500, the lows that we've had was from August. The August lows are right around 43.48. So that's kind of the level that we're looking for, 43.50. And the only reason I say I'd rather have that confirmation for more downside is that it's been extremely choppy. The only kind of real continuation that we had was right around 2 o'clock, 3 o'clock, which was the Powell meeting. That's when we got that leg down. And then we got the leg down pre-market. So I was expecting us to get that extra leg down pre-market for our IWM puts. IWM broke our alert, and I'm going to go over that trade here in a bit. So again, we didn't get that pre-market move like we did post-Thursday into Friday morning. So my point was, this kind of choppiness pre-market crap really had nothing to do with anything. There wasn't any news that made markets at least more attractive to buy. It could have been just closing of positions for the end of the week, but we didn't have OPEX this week or anything. So with that being said, get that tank job. We are now below that yellow line. If you remember here, I put these two lines here. Again, we broke the level from, again, August 25th. We are still above the August 18th lows. And that is lining up perfectly with the June 12th lows. If we get to 43.09, and the reason I say that is because we want to get the percentage calculator to give us the totals that we want. So let's see, 43.09, that would be kind of that gap fill. We'd be down about 7%. So we're not even in a correction phase yet. And again, corrections happen what? How often, team? About once every year, if not every 16 to 18 months, statistically speaking. So correction is 10% from the peak, 20% would be a bear market. So in order to get 20% from the peak, let's do that. 46.33, we have to go by the recent highs, mind you. That's 926 points. So 46.63, let's call it 926. So that gets us to where? 3,500? Not even, 3,600. If we were to get get a bear market, that gets you to right here. 3,600, 3,700 zone. Again, that's just based on calculations. I don't think we get there, so not really much to worry there. But if we do a correction, 463 points, that gets you to where? Let's say 4,200. Boy, that is right there, your 200-day moving average on the S&P futures. So if you think we're going to have a correction, which is definitely possible, you're expecting us to get to the 200-day. That should be the target if you're expecting a correction. We are not there yet. So if we do break below 43.49, that's what we're looking for. And the reason I say that is for the fact that we have seasonality. So let's take a look at it. Seasonality, we're coming into the end of September. Very weak, get a pop, and then we pull back. So again, I do expect more weakness into the end of the month. Does that mean we're going to crater all the way down to 3,500? No. But we'll definitely get a pop, or the expectation of a pop, excuse me, in October. New month, let's see, we're getting into the fourth quarter. This is the end of the third quarter, July, August, September. Let's see how the end of the quarter goes in terms of flows, maybe into bonds, maybe into stocks. We'll see. But again, do not be surprised. In October, we get a pop around the first 2 weeks, and then we sell off. This is pre-election year seasonality. Again, we're 1 year removed from the presidential election based on seasonality. Maybe we get that 10% move. Maybe we get to 4,200 in October. Maybe we get a little higher, maybe 4,400 or 4,300. 4,200, excuse me. And we're about 150 handles away. Feels like a long way away. But again, one slam could definitely happen. Does that mean that all is gone, the world's over? Again, corrections happen every 12 to around 18 months. That is completely natural and normal. Again, we're only down about, 5-6% from the recent highs. So not even a correction as of yet. So October, expect, if we do get a flush, 4,200 might be that level. Again, that is our 10% correction level. Okay, so that's where we are for the market. Let's go and take a look at NASDAQ today. As we closed. For NASDAQ, it's going to be a little more difficult. We are below the 100. We are below the 20. We know what that is. We know what that means. That means that the actual trend is breaking down. But look at the August lows that we had recently, 606. So, tough one, because it's very tough to short here as we're just getting chopped around. We're going to have to widen the stops a little bit if we're going to go ahead and short. 14.8, we got an inverse. Look at that. That's an ugly hammer candle. We're probably expecting more weakness. Here's what we're looking for, 14.750, about 100 handles away. We'll use this red line as our level to break. The problem is that we may bounce. So let's go ahead and do 14.815. We're going to be extremely careful. Again, we'll use futures to our advantage. Let's widen the stop. Let's give it a little bit of juice. Let's give it a little bit of space to kind of, just volatile-like ways to just jump up and down. And that's kind of the problem. It creates fear, creates uncertainty. If you guys remember, I did a euro dollar short that we were very patient on the Forex side. So let me go ahead and bring up Discord. Let me see if I can bring up Forex here. This was done, this euro dollar short was done when? the 5th. So about 20 days, a swing, 107.32. We are now, again, if you held, you're up 90 handles, 90 pips, which is great. You're at 106.42, right? 106.32 was my TP1, and we hit it. Granted, I told everyone you could always take it ahead of time for any kind of CPI or Fed. But again, we had to be patient. Guys, that was nearly, what, 20 days ago, almost 3 weeks ago. And we had session lows in the 6th. We flirted, we were back and forth. We got to break even. We got red. So I think we're going to have to shift our focus in the future side into widening those stops so we don't get hit right away. So futures members, I'm going to have that discussion with you guys this week on the chat about just expanding the stop, and we're going to calculate our stop loss based on our position size. We're just not going to throw stuff out there. So we're going to do that together this week. That would be a really good workshop, I think. So we can go get that posted for you guys, or I'll do a quick video or a quick explanation. So if we decide to short the NASDAQ, if we decide to short the S&P, we decide to short the Russell, oil, whatever, we need to keep that stop wide so we don't get this kind of funky up and down crap that we got just yesterday morning on no news. Let's go ahead and pivot to the dollar. So again, just kind of keeping it macro for now, and then we're going to go ahead and go over the week. 105.87 to around 106. That's your resistance. Kind of holding off, but once that breaks, that should give us the green light to really start pressing some shorts on the S&P, NASDAQ, and what have you, because we know the correlation with the dollar and the S&P. Dollar goes up, S&P tends to go down. It's not one for one like we've talked about, but again, it's something to be expected. Let's go to the 10-year Treasury yield. Breaking out, but could 4.5 be that top? Boy, could it be. Get people worried enough? Absolutely. If we continue to break out above 4.5%, we're going to get to 4.914. That would be your next target, maybe even to around 5.2. Now that's saying a lot. Now could things start breaking if that's the case? Could be. We haven't been this high since 2007. Yes, we know 2007 was the great financial crisis. Now, was that really due to higher interest rates? It's part of it, sure. Makes it more expensive to borrow. That's what it is. But if you're a saver, if you have cash, if you have an emergency fund right now, you're getting a little more for your money than you used to. So there's always a give and take. When it comes to the 10-year Treasury yield, here's the problem. If we have this, again, if you're just doing it by yields, let's say we retest the breakout that we had right around 43.65. What do you think that will do to equities? Probably bounce too. So even though we've broken down, it's a grind. It's a grind. It's not going to be as simple. We don't have much more catalyst. There is no Fed in October, guys. Remember that. So we just had our last Fed meeting until November. So we don't know what the expectation is. Again, we had a Fed pause. I mean, not a pause, but we didn't get a hike. So we're going to see exactly what happens. If you are looking at the S&P in a macro perspective, we broke out of a range, if you can see here, 1 and 2, for between 45.52 to around 43.50. So we'll call it 200 handles from June to now. That's around 3 months, 200 handles. We did deviate above, got it way to around 46.35. Could we get a deviation here to around 43.09? 1 and 2? Absolutely. 43.62. So how many handles was that? 60 points above? 43.48 plus 60? Right around there. About 60 handles. That's probably what we might get. Retest 4,300. That's that 38.2 fib line. So again, there's nothing new with us breaking out of a trend or breaking out of a channel and coming back. You may just get the same thing here. So you're stuck in a channel, these yellow lines, 1 and 2, and then pop higher, pull back. Maybe we pop lower, fall lower, 43.09, and then push back higher. That's going to be a problem. Because if we start breaking down and we start bouncing just because of technicals or what have you, with breaks down, that's going to be a grind. So again, we need to widen the stops. We need to focus on the targets. And again, with volatility, it is such a pain in the ass to deal with. But that's just the reality of it. Tough, I know. Let's go to IWM. Actually, you know what? Let's go over the charts together. Here's the week, a tough week. 0 for 2. 0 for 2 this week. Just absolutely crushing. We are now in a losing streak. Let's go to September. 1, 2, 3, 4 trades in a row red. been a minute. Let's go and take a look. In August, we did not have 4 in a row loss. In July, we did not have a 4 in a row loss. This is when we got really hot, 21 in a row. In June, any 4 in a row? No, just 2s. In May, nope. April, nope. March, we got a 3 in a row loss, but no. February, no. January, no. So this has been the worst stretch, 4 trades in a row in 2023. Very, very tough to see. But we are due for a nice bounce back. As you can see in previous months, after we had to have a little bit of rough patch, we tend to go on a nice momentum ride continually. And I think that's what we're going to get moving on. We're so close to targets. We're getting there. Getting to September. Look at the signals. Apple was green Wednesday on the Wednesday open and then reversed. That was Fed day. And then small caps, I gave the option to close early at 10%. I wanted to play the momentum on IWM. Let's take a look at it. First, I'm going to show you guys the daily. And again, I explained this all on the washes and charts. You can see from the October low, that trend line. And again, we've broken below before in March, April, May, June, and then we bounced. We have a very big gap here at 1676.26. We had volume push higher that day that we filled. We also have a gap to fill here at 179.79. Tough. But we broke down the trend line. You can see the head and shoulders pattern. This may get lower. The problem is timing. When will it get lower? Does it bounce immediately? Thus the premium killing. So 176.67, the damn stock was red today. If we would have been at 176.79, let's say with a 176.56 from the close pre-market, we catch that all day. Maybe even 20%, let a runner do its thing. But all of this happened pre-market, nothing. Pre-market opens green and then we fade. But the damage is already done. And then of course, if I would have held it for next week, like I've done IWM before, it's just more of a grind. We went for it. I went for it. I wanted to get that momentum to the downside. I thought end of month, oh boy, end of week, we're going to get continuation. We did not. This pre-market crap crushed us. And that's on me. I'll take full responsibility on that. I really, really, really wanted to catch the momentum on IWM when there wasn't any. There wasn't any, at least yesterday. And again, it looks like it's going to fill that gap, and it'll probably fill that gap on Monday, which is going to kill me. But the fact of the matter is it just chopped us to death. And that was the death sentence there. Apple. Let's go ahead and take a look at the 5-day chart. This is our entry. I went ahead and put a green marker on it. Pulled back, pre-market, bounced, pulled back Tuesday, bounced nicely, got above a 179.62. Remember, we only have the 180s. One more edge up and we got it. And there's a gap fill there. If we talked about that too. Right there. 182.56, even higher. We got one at 181.58. Not asking for the world. Just go ahead and break to this gap fill here. Even 181.28. We're in the money, ready to go. We went very carefully. Wednesday morning, guys. Wednesday morning, we're green, and then it continued to fall. This was even before FOMC. Just continual downside. Rough. Reversals. It happens. 30 cents away from target. This is what if this was before the Fed, we would have got out of it. I really wanted to get this green. I thought we would bounce with the Fed with really no news. Nothing has really changed other than the assumption of longer for higher or higher for longer. So I think we already kind of, in terms of the Fed, got out of the mentality of they're going to keep raising forever. They don't even know that. I think the idea is this is the new normal. And I think equity prices have to adjust for that. The problem I have here is that the Fed, in terms of their understanding and their past actions, they are so quick to cut, like we know with COVID, 2019, early 2019, when we had the Fed hike in 2018. It's just tough because we don't know. If they wanted to keep things tighter, they would have raised on Wednesday. They did not. And there's no meeting in October. So we have to wait till November to see what the next move is. We got to keep an eye on inflation, CPI, PPI moving forward, but we know that's still kind of coming down. Gas prices being the deviation, bringing back inflation higher. So tough, that's what happened, unfortunately. Have that green marker there. Careful, buddy. So not happy about it. But if we go ahead again, year to date, I had some people ask me, hey, how are you doing year to date? And we are up very nicely. All of it's there. These are all screenshot with all of our trades. I trade every single one. You can see, yes, guys, I do have losses too. Right here, Robinhood. 91% on IWM. I closed it, try to salvage at least something, unfortunately, because it was killing me. At 90%, 92% on Apple. Tough. But they're all there. They're all there, every single one. So if you got some time and you kind of want to back test how we do and everything, look at this. 9-8, undefeated week. I think sometimes we kind of take that for granted, right, team? It feels good when we do, but it's tough when we don't. 170 was a good one on DraftKings. So again, if you want to take a look at the year to date, it is on the premium signals. That was as of July. You can always backtest everything. And of course, guys, I understand. If you just signed up for our group, you're probably thinking to yourself, my God, I have the worst luck in the world. Be patient. This is right now, according to the almanacs, this is the worst time in terms of the stock market. It's usually that last week of September. Just what it is. When it says worst week, I guess that means in terms of price. I don't mind if we fall, guys. We know that. We talked about that in July, that we talked about that dead cat bounce. We put that clip up, if you guys remember. All of our videos are on YouTube. Feel free to take a look at that video from July 15th. And again, I said, if you need the money, that's probably the time to take it. Doesn't mean we won't go higher, of course, and we did. But again, right now, kind of keep this perspective that we're about 6% off the highs. We're not exactly in a correction territory yet. I think we get lower prices in October. The same seasonality happens. The same seasonality is to be expected. It has been pretty close to that analog. The question is, what do we do moving forward? So we just have to be extremely careful. The thing with being a trader is that when you get in a tough streak, now your confidence is shot. But you have to have confidence in every single trade you do, especially if you're risking money in anything. If not, you wouldn't risk money into it. So you just have to kind of erase that memory, but learn from it and move forward and say, okay, this doesn't define me. I've had some really great trades. I've had some really great analysis in terms of you speaking to yourself, that you know what you're doing. And right now it's just a tough tape all around. Even Goldman Sachs trading desk was saying this was a very frustrating tape. So the question is, what do we do moving forward? We're going to let the market come to us. The best thing I can say about this is the fact that we haven't had a week that we only traded 2 options trades the whole year. It was tough. Yes, we went for it on IWM. Apple did not work out, but we got to go ahead and get back to the drawing board. I think Nick worked on the watch list last night for me, and we'll get that posted to you guys, I believe Sunday. That's when we do it. Sunday afternoon, my apologies. So looking back at the week, it could have been a lot worse, of course. The only solace I have is the fact that we didn't really press the issue. It was a tough one. Reversals happen, and we just move on. And that's really it. Come on, buddy. Relax. So with that being said, if you are new here, just be patient. Things turn better. They do. After every night is the day. We know that. And after every day is night. Every expansion comes with a contraction. Every boom comes with a recession. Every recession comes with a boom. It's always the other side of the coin. So this week, we really want to make sure to stick with setups that give us the high probability and be patient with them. I know kind of the same thing we've been doing now for a while. It's just a tough tape. It's not blaming anything. It's just the reality. We have everything here. And the worst part this week, guys, the worst part was the fact that Netflix and Microsoft, I was tracking it with you guys. I was telling you, it broke my alert, and then it was just chopping all around. And then because of Powell, we fell. And that's fine. But we just didn't send it. Hindsight being 2020, absolutely. I wish that we would have sent out Microsoft. I go, Microsoft's now below the 325. I'm grinding my teeth because I like it short, but it's tough here. Ahead of FOMC, things can change quickly. And we had this price action yesterday. We were weak on, then bounced on no news just to the chop. And that was on the 19th of September. So let's go ahead and take a look at Microsoft rather quickly before we sign off for the weekend. This one is getting a little antsy. I'm going to have to take him for a walk. Let's go to the 5-minute chart. This is 5-day, the 19th. Again, the fall, and then we had that push higher, the push higher into Wednesday. Boy, if I would have filled those puts, we would have been great. But again, that's a flip of a coin. Because if Powell would have said something bullish and the market just flips, then we would have soared on Microsoft, and there we go. And we had Apple anyway. So if we would have had Microsoft puts, it would have been a hedge. But if we get chopped and nothing happened, we would have got double hit. So that's one of those things that you kind of have to just play on the fly and kind of stick to your guns. I stuck to my guns and it didn't work out. And that's okay. Because it's worked out more times than not. And I want to stick to the analysis. I still think we have more downside to go. I really, really wish I would have sent Microsoft and Netflix puts, now being hindsight 2020. But hey, we got some breaks here. We're below moving averages. Let's see what we can do. It's not going to be as simple as just sell everything in the morning. You get news in the morning, you get price upgrades, all that crap. Let's go and take a look at the week in terms of Forex Factory. All right, we got final GDP on Thursday. We have core PCE on Friday, September 29th. That's the preferred inflationary gauge for the Fed. Unemployment claims have been strong, still strong labor market. The thing that I think that stands out here is that Fed Chair Powell is going to speak at 4 p.m. on Thursday, so after hours, oh boy. And we have a GDP number on Thursday. And then we have the core PCE on Friday. New home sales on Tuesday, important, sure. We know real estate is important. Housing is. And that's the end of the quarter. That's the end of the quarter. And here we are for October. October, we have the first week non-farm payroll report, so that's the next week. And we have the private payrolls as well, and OPEC meetings. So we'll take it 1 week at a time. This is the last week of the quarter. I have not added September. In September, we are about 5 out of 10. Pretty choppy tape, kind of 50%, the worst of the worst so far this year. If we go to the third quarter, we are right around 76%, 45 out of 59. We're still green for the quarter. I have not added September. Relax, Papa, relax. I'm gonna let you down. All right, well, either way, we're gonna keep it moving. Third quarter has been rather mixed, but a great week can really put the bow on the quarter and see where we go from there. Q3's been rough, but hey, pressure builds diamonds. Let's see what we get, guys. Let's keep pushing. Let's make sure to be careful, and we got a lot of work to do. Got a lot of work to do, you know. The first step, that's all it takes. So Monday we come in ready to go. We'll have the watch list out to you guys. On the blog, I'll post out a couple of also things I'm watching as well. The last thing I want on Monday is a pop. That's the last thing I want. I want continuation. So again, the one thing I worry about is S&P getting above 4,400 or NASDAQ getting above 15,000 on the future side, because that's just going to be a pain in the behind to deal with. All right, buddy. All right, we'll go and leave it there. Have a great rest of your morning or afternoon and the weekend. I will see you guys on Monday for the morning notes. I'm going to go and take them for a walk. Have a great rest of your day. Cheers, guys.